big new topic, hot new topic, the new tax bill. How is it going to affect me? Is it good? Is it bad? When's it going to take place? All those things you see circulating all over the internet and questions being asked every day. I'll go over a few of the highlights to guide you on how it affects you and your taxes. The first one you'll see is the tax bracket change. So what that means is your income is being taxed at a lower percentage. Is you're seeing a change in your payroll deductions. At your job, your payroll company has changed the tax tables. So the end of January or the 1st of February, you've seen a change in your withholding. You've got more money per paycheck. It doesn't mean you're going to owe more on the tax return. It means you're filing at a lower rate and it's going to adjust and accommodate accordingly to your situation. The second piece is there's been a change in the child tax credit. The child tax credit has historically been a $1,000 credit for having dependents on your return that were under 17. The new tax bill has doubled that child tax credit. It is now a $2,000 credit per child, and it was limited by income at what we would consider a lower level. Now that's been extended all the way up to $410,000 of income for married filing jointly. So that credit equals $1,000 more in your pocket per child, which is awesome. That's making a significant difference on tax returns. The third change that you'll see on your tax return is the standard deduction is doubling. Historically, your itemized deductions are mortgage interest, property taxes, charitable contributions, medical expenses, unreimbursed employee expenses. Those items you add up, and if they exceed the standard deduction, then those are the items that we want to take that are more beneficial to you. Well, now the standard deduction has been doubled. For married filing jointly filers, that's over $24,000 in a standard deduction. It doesn't mean you can no longer take these items and itemize. It means you're probably more beneficial taking the larger deduction. There's a lot of misconception there that that's going to cost you money on the return. That's not necessarily the case. If those deductions now add up to more than the standard deduction for 18, then you're still able to take those. But we take whatever's most beneficial to you, whether it's the itemizing or the standard. And those are decisions we make on the tax return. Another huge question is, when does it take place? Most of the tax law changes took place as of January 1st, 2018. So they'll have no impact on the return you're filing right now. They'll have no impact on the 2017 return. It'll be very similar to your 16 return from a law standpoint. But for 2018, all of this comes into effect. So when you're filing your 2018 taxes, that's when these items will come into play.